The euro currency saw a big move higher today, getting all the way up to 109.50 before settling back at 109.45, breaking out of the range, seeing its highest print since going back to mid-January of earlier this year. Now, a lot of that came on after the ECB met today. They did not cut rates, that was expected, but they did talk about the need to potentially cut rates later on this year in, say, the June ECB meeting, as long as inflation and the economy stay on their current trajectories. Now, this has been messaging that's been in place for quite some time, unlike our Fed, which has seen mixed messaging about the future of potential rate cuts. Likewise, here in the States, we saw the dollar get crushed. It's been moving lower for quite some time. We had higher than expected jobless claims, plus we had day two of the Fed chair's testimony to Congress, where he reiterated that the Fed would be cutting rates later this year. Didn't give an exact date, but did talk about the need, as long as inflation stays on its current downward trajectory, and that there are risks to the economy. So they look to be cutting rates, but haven't been really steady on their messaging, unlike the ECB, which has. Ultimately, we saw the dollar get hit very hard today, making its lowest print since the middle of January, as we saw the euro rally again, getting north of 109 up to 109.5 for the first time since January. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And as volatility has trended lower in the euro for much of 2024, it did start to flatten out earlier this week, and today we actually saw a little bit of an uptick as we broke out of the current range. After we got above the 109 level, a level we had not traded above since the end of January, and getting to our highest since the middle of January, we did see volatility moving higher as prices broke out to the upside. Lastly, let's talk about what we have tomorrow. Tomorrow's Friday, we get the non-farm payroll number. It'll be interesting to see how that number could affect the future move of the dollar and the euro, given the fact that we've seen a big move lower in the dollar and a big rally higher in the euro. It'll also kind of be that post-Powell testimony trade, along with that post-ECB policy meeting trade. How does the market absorb what it's taken in over the last couple of days? As far as any shifts in policy, we didn't really see that on the ECB side, but on the Fed side, we continue to see the market continue to price in more aggressive rate cuts. Right now, market hanging its hat on a June FOMC rate cut, while the ECB is also doing the same. So heading into the weekend, actually one day prior to the weekend, we see the euro rallying up, getting out of the old range, getting as high as 109.50 today, ahead of tomorrow's non-farm payroll.